let's talk about the one-stop shop approach, which is what I love about y'all. My understanding is you guys have about 40 private accredited investors that are all kind of shapes and sizes. They look at deals through different lenses, but whether, if they're watching and they've got, call it a fix and flip, or they've got a long-term kind of buy and hold, or, kind of the hot buzz right now is the STR, the short-term rentals, particularly in the luxury space. They can get bridge financing. Is there all of the above, regardless of what type of deal they're trying to put together, you being that one-stop shop, they can present the deal to you and odds are y'all can place it. Is that accurate?
That's actually very accurate. We have gone to great extent to try to collect as many lenders that would work in these various different genres as we possibly can. And I think we've come up with, actually, it seems like almost every single day, it feels like it may not literally be, but a new one comes to market and brings us their products. And, we test them. We have very in-depth and long conversations with them about what our clients need. A lot of times these lenders tend to do things backwards, in my opinion. They will put a product out and then say, let's try to sell that product. And my lenders that I work with have come to us now to say, what is it that your clients actually need? And then they're creating products for that. And those are the relationships that we have really spent a lot of time nourishing, if you will. And we found some really amazing lenders that, especially in the STR market, which was a very difficult market to break into for a lot of folks. We now have several lenders that are very STR friendly. And with the houses and the customers that you have brought us, wow. I've been pleasantly surprised at not only the results of the rates, the terms, the debt servicing sides of these things. So, the houses are important. You guys have done a great job at identifying those, so that helps your clients. Ipso facto helps us, makes our life a little easier as well.
Yeah, I appreciate that. You have taken care of, anyone that I've known that you to work with absolute kid gloves. They've all had great reviews up to this point, which is why you're here on the channel with us today. Guys, if you know that you want to have a discussion with Ken and his team about having a private lender in your back pocket for a critical part of your deal-making team, we'll go ahead and drop the email below. Email rymak@vipfinancialeducation.com. That's rymak@vipfinancialeducation.com. Be sure to include your first, your last name, the best number to reach you in VIP lending conversation in the subject line. That'll go directly to Ken and his team, and they'll reach out to you ASAP. Again, what I like about Ken and his team is they do want to talk about your short and your long-term goals so that they're not necessarily approaching you always with a product. You might have something that they can handcraft and create a product for. I love that. You don't get that in institutional lending, guys, period. You have to fit in their round circle or their square peg, if you will. And if you don't, you're simply out. So Ken and his team do a great job. So let's talk about the process. If they do reach out, you've had that conversation, what does that look like? Talk about the process, if you will, kind of from soup to nuts.
Sure. So the very first thing right off the bat is that, we do want to talk about those goals. What is it that ultimately you're trying to accomplish, not just for today, but perhaps in the future. And it's very important to have those conversations because how we approach one particular house versus another, or one particular goal versus another, will have a bearing on how we approach the very first one that we help you with. We always want to make sure that you're setting yourself up for that opportunity down the road, if in fact that's what you're trying to accomplish. I can't imagine that there's going to be too many people that are going to be one and done once they see the results of what I've seen anyway. I've been just blown away by some of these numbers. But so, we have that initial conversation. Once we get past that, then we kind of get to the nuts and bolts of things. So now I need to start getting the basic information. We are going to have to, pull credit, of course, get an idea of where we're at. As much as I'd love to just take everybody's Credit Karma version of what their score is. Unfortunately, that's not the way it works. So we do have to go by mortgage scores. So Equifax, TransUnion, and Experian, we take the middle score, and that's the score we're looking for. We also need to know, how many folks are going to be on the deal as well. And then we don't really have to talk about income because most of these deals are not income driven; they're property driven.
Correct.
So it's really all about the property more so than anything else. We have to decide whether or not you're trying to close it in your personal name or in an LLC. Those elements are important. If you're going to go LLC, just quick side note, it would be best if you have an LLC in the state in which you're trying to purchase the property. Usually, like for example, here we're based out of Florida, so just as a quick example, I think it's $125. Takes you 10 minutes if you're slow on sunbiz.org. And it's usually best to have each individual property in its own LLC anyway. But just name it the property address. It protects you in the event that, God forbid, somebody were to sue that particular property for whatever reason. It protects your other properties, so they can only go after the one. And I know that's a very extremely rare case, but, we try to look at everything and make sure that you're covered everywhere.
I want to talk about a couple of quick things. So you said that this is property driven. So let's say John Q, home buyer, he's an investor or she's an investor. You don't really care too much about them. Now, there's that initial credit pull, which my understanding is that lasts for 90 days, correct? So if they do want to do multiple properties, it's not multiple inquiries on their bureau. So obviously that's a great thing.
Correct.
But you guys are more concerned with the property itself. So in asset-based lending, you're not concerned. You're not pulling tax returns like institutional money is going to. The underwriting process is really a credit pull. Then you're dissecting doing analysis on the house, which, like short-term rentals, you guys are just looking at a pro forma. You're looking at, cash flow position on that. You're looking at debt servicing on that. If it's an active short-term rental,
right,
that's already going to be covered by booking. So all of those kind of ingredients go into this recipe, and then it kind of spits out your lending guidelines on that. So what would be the minimum requirements then? So you touched briefly on credit. Obviously 700 and above would be ideal, but should people disqualify themselves if they're a little bit lower than that? Or is that just going to be kind of dictate the terms and conditions?
Yeah. So look, 700, of course, that's what everybody wants. We can go all the way down to 660. The variable difference there is when you're down. Actually, we can go all the way down to 620. We can do 620 to 660. The variable there would be the loan to value in which the lender would be willing to give. So you're probably looking at more like a 65% loan to value with a credit score there. So you'd have to be coming to the table with a little bit more money. Now, when you're starting to pump up into the 660 to 700, your LTV is more like 75, and those that are a solid 700 or higher, we can usually do 80%. So, of course, there'll be a dramatic difference in the down payment. Of course, common sense should say that the terms will vary, of course, as well. Your interest rates get better with the higher the score. I know that generally tends to be common sense, but it never hurts to say.
Sure.
And then, the overall terms. So we have multiple different variables of terms that are available to people from a prepay standpoint, an interest rate standpoint, whether we can do interest-only payments or regular conventional type payments. So there's variables that are in play there. But basically, once you hit 700 or higher, you're more able or more likely to be able to kind of call your shot, so to speak.
Yeah, I love that. And we often talk on the channel here about getting your credit where it needs to be, guys, because the better your credit is, the better terms and conditions you're going to get, from lenders like rymak or any lender out there, obviously. So with asset-based lending, you guys are less concerned, again, about the borrower. You're more concerned about the house itself. So in that same light, what investors love about working with private money is that it's not affecting their DTI personally. So what a lot of investors do is stack these properties up because it's what their actual income and what their debt to income ratio is personally is irrelevant in these instances. Can you kind of talk a little about that?
Yeah, so there's a couple of different things there. You hit it pretty well dead on the head. The first thing the lender is going to care about is the credit score. The second thing they're going to care about is the property itself, and the third will be the show me the money phase. of this. You know, they're going to want to see where those assets are coming from for the down payment. So they really keep it simple with these products from that standpoint. As far as the DSCR, the non-DSCR, we're seeing some pretty amazing numbers. So you have your DSCR, debt servicing, which of course, all they're really looking for there is to make sure that the property has the ability to pay for itself versus the mortgage. It's just that simple. With the STRs, the short-term rentals, those used to be substantially more difficult to debt service because there just wasn't enough data out there initially. But again, we've really worked hard with our lenders to get some more friendly approaches, more friendly appraisers as well that have a better and more clear understanding of what short-term rental really means and how to give us the proper numbers. Matter of fact, one of the first deals we did with you guys, their mortgage ended up coming in at $3,500. The short-term rental was at $5,700. We had the very next one was amazing. Actually, we were kind of helping them with a refi situation, and ultimately they were paying somewhere in the neighborhood of 12-13%. We managed to get that all the way down into the 8s, which dropped their payment somewhere in the neighborhood of about $6,000. However, most exciting one, that's the most exciting one to this point, that short-term rental came back at $17,000 a month.
Mm-hmm.
Wow, what a home run. Yeah. Oh my God, what a home run. I was so happy for them too. They were salt of the earth folks, definitely enjoyed working with them, and to see something like that hit for them, it really fills the heart, that's for sure.
Yeah, I love that. And I love the personal touch that you give these folks too. And I've heard that time and time again as far as that feedback goes. So guys, if you need a private lender, it doesn't matter what asset investment class you guys are looking at. This could be a great fit. If you are interested and you want to have a conversation with Ken and his team, go ahead and email rymak@vipfinancialeducation.com. We'll include that link below. Make sure you put your first, your last name, the best phone number to reach you at, and VIP lending conversation in the subject line. Someone from Ken and his team will get back to you ASAP. Have a quick conversation about your short and long-term goals, and take a look at any properties that you might have to present and see if it's a good fit. As always, guys, go out there and do your own research, due diligence. We're going to continue to bring resources here on the channel when they kind of pass the smell test with us, which is why rymak is here on the channel today. We'll continue to feature them as long as we're getting those phenomenal results like we've been getting. So thanks for joining us on the video. Until next time, take care. Make it a great day.